I'm here to discuss the tax rules surrounding holdings in gold, silver and crypto with BDO tax experts Iain Craig and Mark Lodder. How do you both? I've been really looking forward to this conversation.
So have we, Madison.
Iain, why don't you give us the broader overview first? How are holdings, or rather sale of holdings in these assets, considered in the eyes of New Zealand tax law?
Yeah, I think the easiest way to explain it is to compare it to shares, where when you buy shares for long-term hold, your expectation is you can get a dividend income. And so that's the income side of things. So when you sell your shares, and assuming you're not a trader or bought the shares with intention of resale, then there's no capital gains tax on the sale of the shares. With gold, silver and crypto, there is no, well, there might be some cryptos where you can get an income, but I'll let Mark discuss that. But generally with gold, you're not getting a dividend. You're not getting a yield on it. Same with silver. So the implied position there is that you must have bought it with the intention of resale. Therefore, any sale will be taxable as ordinary income because we don't have a capital gains tax. So yeah, basically when you sell your crypto, your gold or your silver, you should expect to be taxed on that and include it in your personal income tax.
So just to be clear, the scale of the tax that is applied to the sale of the size of that asset is determined based on your personal tax marginal rate. Is that correct?
That's correct, yeah.
So it's kind of treated like property in a way, is it?
Well, I guess it is a form of property, not real property, but obviously property, and you bought it with the intention of selling it, and there's a taxing section of the Act that says we'll have the gain on that and tax it as ordinary income.
Mark, is all crypto treated the same? Is Bitcoin treated differently to, say, Dogecoin?
I find it hilarious that it's Iain and I talking about crypto, but that aside, we're talking about tax, not the mechanics of crypto and how that works, because I still can't get my head around mining it. But anyway, so crypto, there's quite a lot of things to think about here. But I think, as Iain said in particular, it's why did we buy our Bitcoin? Why did we buy our Dogecoin? If we bought it for the purpose of resale, we're going to tax it. If we bought it as a part of a trade, we're going to tax it. Profit-making undertaking or scheme, we're going to tax it. These are all surprises to people. Gold, similar concept. But crypto can take many different forms. You've got airdrops, you've got hard forks, you've got soft forks. You can stake your Bitcoin, which is, as Iain mentioned, so this is a little bit like lending and receiving a reward for lending it, which could like an interest payment or a dividend. And that might be considered to be an argument that I didn't buy my Bitcoin for sale. But with all of these things, actions speak louder than words. So I can tell you till I'm blue in the face, Maddie, that I bought my Bitcoin because I was going to lend it to you and it's going to get stake, and I was going to get stake rewards back. But when you look into my transactional history, you might see that every time Bitcoin peaked, I started to take some profit. And then you start to build up a number of transactions. Starts to look like I didn't really buy it for staking. I bought it for sale. And that will be taxable. Airdrops, you get given something for free. That's slightly different. That might be, you might be taxed on an airdrop. So that's something that, they've given you a reward for nothing because they want to promote Dogecoin or whatever it might be. Airdrops is really more if you're in the business of, or you have a profit-making undertaking or scheme behind it, because you haven't really acquired for the purpose of resale. A hard fork is similar in that you might have had Bitcoin, but now you've got Bitcoin and soft coin of whatever it is. So you've got two coins now. Again, I haven't bought anything for the purpose, but I might be in the business. And a soft fork is where you've gone from Bitcoin has wholly changed to Nitcoin. I can't think of anything else.
It probably exists.
yeah, I'm sure it does actually. So there's all these things to think about, but I think Iain nailed it. Why did you buy it? If it's the principal purpose was to sell for a profit, then New Zealand law will tax it. Inland revenue is hot on crypto. Yeah. The last stats I saw, there's something like 230,000 people in New Zealand that are transacting or having Bitcoin investments. There are some 8 billion transactions, and inland revenue is using, I can't explain it, blockchain analytics and other methods to find these people, and then ask the questions. We noticed you have been trading in Bitcoin, or you've had some transactions. Tell me why you haven't taxed it.
I think the mark's interesting about the inland revenue following through. Now, our tax system is based on self-assessment. So if you include it in your income tax return, you've got nothing to worry about. You've declared that you've paid tax. But if you get one of those letters from the inland revenue and think, I didn't disclose that, or I thought it was well hidden, then you've got a lot of awkward questions that you've got to deal with. And we have seen over the last 2 budgets increased budget allowance made to inland revenue to increase their audit activity and following through on lots of it, tax where it's undeclared tax or tax that should have been paid that hasn't been paid. And we are seeing increased activity in that area. So just because it's in the crypto world, don't expect the revenue to not find it.
So just to be clear, you have to declare the gain you make on any sale of gold, silver, or crypto like Bitcoin, not a holding that you have to declare?
Correct. It's aimed at taxing profit or income generated from it. So if you're in the stake in a lending situation, then you may be taxed on the income that you get from that stake system. Also with gold, there was some helpful inland revenue publications where they gave some very limited exemptions where somebody might have bought gold for a particular cultural aspect. Maybe there was a wedding coming up and they needed the gold to, maybe make some jewelry for the bride to be or things. So limited exemptions, which might be worthwhile having a look at and exploring to see if you can get out of it. But yeah, the lack of an income stream from those types of assets means that you're assumed to have bought it with the purpose of resale, and you need to work very hard to prove if it wasn't that purpose, if you didn't have that purpose, which is a challenge.
So I think Iain makes a really important point with respect to gold and silver in particular, and there's really, really good case law on this. So some of the arguments that are presented is I've bought gold as a hedge against inflation or societal collapse. That doesn't protect you from paying tax at the end of the day. If you sell them, that's still deemed held for sale, even though you're trying to argue it's a hedge against inflation. So just be wary of those arguments. They don't necessarily work.
A great point. Thank you so much for all this information. It's been fascinating. Thank you so much.
Our pleasure.
Thanks.